All right, let's dive into Medicare and long-term care insurance. We're talking about healthcare in those golden years, and, there's a lot to think about. You're here because you want to get this stuff right, and
Yeah,
I think you'll have some of those aha moments along the way.
definitely in the right place for that.
Mm-hmm.
We're going through this document, breaking down insurance plans and really getting to the heart of what matters so you can make smart choices about your future.
I like it. Let's start with Medicare. That cornerstone of senior healthcare. A lot of people know it's funded through those payroll taxes. But here's something I bet you didn't know. People with higher incomes actually contribute a bigger chunk of their earnings to Medicare than those with lower incomes.
Yeah, that's true. Medicare is designed to be that safety net, making sure quality care is accessible to everyone. And there are two main paths you can take. Original Medicare, that's run directly by the government, and then there's Medicare Advantage, which is offered through private insurance companies.
Okay, so original Medicare, that's the one with parts A and B. But instead of going over the basics again, let's get strategic. For folks still working past 65, and they've got that employer-sponsored health insurance, is it always the best move to delay signing up for Part B?
Not always. Especially if your employer's plan falls under COBRA, that Consolidated Omnibus Budget Reconciliation Act, which basically lets you keep that covered even after leaving your job. There are specific rules you got to be aware of. Sometimes jumping into Medicare Part B right away could actually be the smarter move.
See, this is exactly what I'm talking about. Those little details can make a big difference. So anyone in that situation, don't just assume anything. Really dig in, talk to someone who knows the ins and outs of benefits, figure out what truly works best for you.
Couldn't agree more. Every situation is unique, right? And getting a good grasp of what your options are is crucial. Now, let's shift gears and talk about those gaps you find in Original Medicare. That's where Medigap, or Medicare Supplement Insurance, steps in.
Medigap has always intrigued me. What are some concrete examples of those costs that Medigap covers that Original Medicare leaves out?
Oh, that's a good question. Imagine you need surgery and you're on Original Medicare. You're going to be hit with deductibles, coinsurance, and potentially some out-of-pocket expenses. Medigap steps in and helps cover those, easing that financial burden.
That makes a lot of sense. It's like an extra shield to prevent healthcare costs from going through the roof. And I've heard there's a time when you can get Medigap without having to answer any health questions. What's the deal with that?
That's the amazing thing about the Medigap open enrollment period. It's a 6-month window that opens up after you enroll in Part B, and it doesn't matter what your health history looks like. You're guaranteed coverage, which is a game changer for folks dealing with pre-existing conditions.
That takes a huge weight off, knowing you're covered no matter what your health situation is. So with Medigap, it's not just about filling those gaps, it's about peace of mind. But we can't forget about the other big piece of the puzzle, right? The one people tend to avoid, long-term care insurance.
You're spot on. We're talking about extended care here. Things like needing help with bathing, getting dressed, or even eating. Those are things Medicare doesn't fully address. And that's where long-term care insurance, or LTCI, enters the picture.
I'll be honest. Long-term care is a tough topic to think about. It forces us to face the possibility of needing help with those really personal, really basic things. It's no surprise people find this part daunting.
That's understandable. But LTCI isn't just about preparing for the worst-case scenario. It's about giving yourself choices and a sense of control over how you receive care in the future.
I like how you put that. So how do we even start to make sense of LTCI? There seem to be so many different options and factors to consider.
Yeah, it can feel overwhelming. Let's start by breaking down the 3 main types of LTCI contracts. First, you've got life insurance riders, which offer those LTC benefits as an add-on. Then there are hybrid plans. Those combine LTCI with life insurance or annuities, providing benefits whether you need care or not. And lastly, there are standalone LTCI policies. Those focus solely on long-term care coverage.
So a whole smorgasbord of options. I'm assuming each type has its own pros and cons.
You got it. Each comes with its own nuances, and we'll get into those a bit later. But the good news is, the NAIC Model Act sets minimum standards for LTCI policies. It offers a baseline of consumer protection. So you'll still want to carefully read the fine print, but at least you can be sure of some basic safeguards.
Okay, that's good to know. But before we delve into the specifics of each type, I think it's important to understand the foundation of LTCI, those trigger events that actually quick start those benefits.
Yeah, you're right. That's where things get really interesting.
Okay, so we're talking about those trigger events for long-term care insurance. What exactly qualifies someone to actually start receiving those benefits?
Well, there are 2 main triggers built into most of these LTCI contracts. The first one, it revolves around those activities of daily living. or ADLs as they're often called. We touched on those earlier. If you lose the physical ability to perform two or more of these essential tasks, like bathing, dressing, or even eating, that can be a qualifying event.
So it's not just needing a little help here and there. We're
No.
talking about needing substantial assistance, right?
That's exactly it. The policy language often uses that term substantial assistance, meaning you need hands-on help or someone has to be there just in case. It's all about ensuring your safety and well-being. Now, the second trigger, that one focuses on cognitive impairment.
Cognitive impairment. So we're talking about things like memory loss or maybe difficulty making decisions. That can trigger benefits too.
Absolutely. Think about conditions like Alzheimer's or dementia. If someone experiences a decline in memory, reasoning, or judgment, and it impacts their ability to live safely and independently, that can trigger those benefits. It's about recognizing that long-term care needs can come from both physical and cognitive challenges.
That's making a lot of sense. But I have to ask, how do those benefits actually work? Is it like a daily allowance or does it depend on the specific type of care you need?
Ugh, that's where it gets a bit more nuanced. And this is where that pool of money concept comes into play. A lot of LTCI policies operate on a total dollar amount, not just a set number of days.
So it's not as simple as saying, okay, this policy covers 3 years of care. It really depends on that daily benefit amount and the type of care you need, right?
Precisely. It's all about how far that pool of money will stretch. Let's say you have a policy with a 3-year benefit period, and it pays $100 per day for institutional care, like a nursing home, for example. That's a total pool of $109,500, 1,095 days multiplied by $100 per day. But if you only need home care, which often costs less per day, let's say $50, that same pool of money could potentially cover 6 years.
Wow, that's a big difference. So choosing a higher daily benefit limit up front could actually mean more flexibility and coverage in the long run.
You got it. And here's something a lot of people miss. A higher daily benefit might actually save you money over time. Your pool of money lasts longer, and that gives you more peace of mind. Of course, a higher benefit also means a higher premium, so finding that sweet spot is crucial.
So you're not just thinking about what you can afford today. You're projecting those needs into the future. And I imagine there are other policy features that can really impact things.
You bet. Let's talk about elimination periods. Just like with other insurance policies, this is a waiting period before those benefits actually kick in.
So you might need to pay out of pocket for a certain amount of time before that LTCI coverage starts.
Exactly. And the length of that elimination period can vary a lot between policies. So it's something to think about carefully based on your financial situation. Another important one is the waiver of premium while you're receiving benefits.
Oh, so you wouldn't have to keep paying those premiums while you're actually using the policy. That would take a lot of pressure off.
For sure. It lets you focus on your care needs without that extra financial stress. Then there are non-forfeiture options. These give you some value, even if your policy lapses because of non-payment.
It's like a safety net within a safety net. So even if you hit a rough patch and can't afford the premiums, you might still get something back. What are some examples of those non-forfeiture options?
Well, you might end up with a reduced paid-up policy that offers a smaller benefit amount, or a shorter benefit period, or even a cash surrender value. It's a way to protect your investment even when things get tough.
This is all incredibly helpful. I'm starting to see how much goes into picking the right LTCI policy. Any other pro tips you can share?
One of the most important things to look for is an automatic inflation rider, or AIR. This feature automatically increases your benefits as time goes on. It helps keep pace with those rising healthcare costs.
That makes perfect sense. You don't want your coverage shrinking because of inflation. So far, we've been talking about private insurance options, Medicare and long-term care insurance. But what about public programs like Medicaid? Where does that fit into all of this?
Medicaid is a crucial safety net, especially for folks with limited income and assets. While it does cover some long-term care services, it's important to know that Medicaid eligibility is based on specific financial criteria.
So unlike Medicare, which is usually available to everyone over 65, Medicaid is really for those who need financial assistance.
Exactly. And there are some key concepts to understand, like asset depletion, which means spending down your assets to meet Medicaid's requirements.
So there's a strategic element involved. It's not just about your income, but your assets too.
You got it. And there's a 5-year look-back period, meaning Medicaid can look at your financial transactions to make sure you haven't transferred assets just to qualify for benefits. It's best to talk to a financial advisor or an elder law attorney. They can help you navigate the ins and outs of Medicaid eligibility.
So it's not as simple as just filling out an application. There are rules and strategies to think about. I've heard about something called long-term care partnership programs. Do those have anything to do with Medicaid?
Yes, those programs can be a great way to bridge the gap between private insurance and Medicaid. They encourage people to buy private LTCI while protecting some of their assets in case they need Medicaid later
So
on.
you can have a plan in place for both scenarios. Having that private coverage and potentially needing Medicaid down the road.
That's the goal. It's all about creating a plan that's comprehensive and flexible, a plan that takes your individual circumstances and future needs into account.
It feels like we've covered so much already. Medicare, Medigap, of different kinds of long-term care insurance, even Medicaid.
Yeah.
Before we wrap things up, I think it's important to take a step back and look at how all these pieces fit together.
I agree. Let's connect the dots and make sure everything's crystal clear.
Okay, so let's tie it all together. We've gone through Medicare, Medigap, all that long-term care insurance stuff, and even Medicaid. It can feel like a lot, but I think the big takeaway is that planning for healthcare down the line in the future is super important.
Absolutely. Medicare sets the stage, but it's not the whole picture. And that's where those supplemental options really make a difference. You've got Medigap to help fill those gaps and to help you handle those unexpected costs that pop up. And then long-term care insurance that tackles those extended care needs that are often, overlooked.
I used to think long-term care insurance was just for like super wealthy people.
Yeah.
But after going through all this, I'm realizing it's about way more than just money.
It really is. It's about keeping your independence and having choices. It's about knowing you'll get the care you need when you need it without putting a huge financial burden on yourself or your family.
And we can't forget about Medicaid, that safety net for those who need it. It's a complicated system, but it's so important for providing long-term care, especially to those who qualify.
You're right. Getting a handle on these different layers of coverage and how they all work together, that's key to making smart decisions. It's about building a plan that fits your own situation and goals.
So what does this all mean for you, our listener? What's the message we want you to take away from all of this?
It's all about taking charge. Don't wait until there's a crisis to start thinking about this stuff. Take control of your future, explore your options, and make smart choices about your healthcare.
This isn't about just checking boxes or filling out forms. It's about really defining what aging well means for you. What matters most to you? How much independence do you want to keep? What kind of support system do you have around you?
Those are the questions you need to be asking.
Mhm.
It's about having a clear picture of what you want your future to look like and building a plan to support that.
Going through this deep dive, I've had some of those aha moments myself. I'm realizing planning for long-term care, it's not just about the financial side. It's about peace of mind. You know, knowing that I have options and support if and when I need them.
Absolutely. And remember, knowledge is power. The more you understand these complex systems, the better you'll be able to navigate them and make choices that truly align with what you need and what you value.
We've really just scratched the surface here, but I hope this deep dive has given you a good starting point and maybe even sparked your curiosity to learn more.
Definitely. Don't be afraid to reach out to financial advisors who specialize in elder care or to explore online resources and have those important conversations with your loved ones.
And one last thing, remember, this journey isn't about reaching some final destination. It's about making smart decisions along the way.
That's it. Thanks for joining us on this deep dive. We hope you found it helpful and empowering.